people ask me for my liquidity predictions or my Bitcoin price predictions, I have been hesitant to give 2024 ones because there's some decision points ahead. But I keep reiterating that I think the spectrum of 2024 and 2025 will be positive for liquidity and positive for things like Bitcoin price and other things like that. But there are some turbulence factors, I think, ahead in 2024 where they might not materialize, but there's a decent chance that they will. So my conviction is more about the 2-year period than the 1-year period, if that makes sense.
Welcome back to Money 101. Lyn Alden recently shared her cautiously optimistic outlook on Bitcoin's liquidity and price trends for 2024 and 2025, emphasizing a broader perspective over immediate outcomes. Adding context to her insights, recent market analysis aligns with Lyn's predictions. The global economic landscape's digitalization and growing interest in decentralized finance create a favorable environment for cryptocurrencies, particularly Bitcoin. Institutional engagement is on the rise, contributing to its potential for sustained growth. However, the inherent volatility in crypto markets demands careful consideration of associated risks. Diversification and staying informed are essential strategies in navigating this dynamic space. If you appreciate our content, remember to hit the subscribe button and like the video for timely updates on crypto trends.
50 billion in capital comes in, that can drive the price by several hundred billion, the market cap by several hundred billion. When I review my price predictions from the last cycle, when Bitcoin was like 9,000, I was talking about 30 to 50,000. And I was talking, when it started to kind of hit that 20, 30,000 mark, I was doing interviews saying, I think it's going to hit $1 trillion market cap, which is, a little under 50,000 a coin. And it touched all that. After that, I said, well, the bull market's playing out. I'm looking for like 100, 120,000. I wasn't trying to be too specific. I was kind of on the conservative end of what a lot of estimates were. We didn't really touch those. We only got to around 69,000. So we met my first estimate. We did not meet my second estimate last cycle. This cycle, one thing I keep stressing about my liquidity correlation that I've been pointing out, Bitcoin is highly correlated with liquidity in terms of direction, but there's very little way to judge a price from it, right? It's not really useful for magnitude. So it's not one of those like stock to flow models where you can say, okay, at this date, it should be this price. Like I think that a lot of that is really hard to judge. My base case expectation is for new all-time highs, hopefully over 100K, so hopefully 6 figures. But then literally that range, like you both gave your numbers, that range I think is entirely reasonable. And I actually be hesitant to guess where that ends up. I think that something like 100,000 plus would be kind of disappointing for a bull market cycle, especially after the prior bull market cycle was on the disappointing end too. So I'd kind of hope for 200,000 or more over the next 2+ years. But again, other than kind of stressing that Bitcoin does tend to be very correlated with liquidity, and that I think it'll be materially higher in 2 years. The range for what it could be is based on so many things that are hard to judge. What are the Bitcoin? Are the ETFs indeed going to be approved as everyone expects? What's the amount of capital that's going to flow into them? Are we going to get any other surprise nation state shocks or changes? What's going to happen with some of these liquidity effects we just talked about? For example, if we have a negative liquidity environment, say the middle of 2024, you could have a pretty big correction before eventually going higher. And so there's a huge array of variables that I would be very hesitant to try to guess. I talked to some bank boards that invite me to talk to them about Bitcoin, or again, some of these fiscal problems. There are institutions that, think it's rational to have an allocation. Sometimes you'll see people that are not in the ecosystem are like, oh yeah, Bitcoin's all the millennials, just kind of, they'll kind of mix up Bitcoin and crypto and just kind of put it all in one basket and say, oh, that's what the crazy kids are doing. And it's like, well, you should see the people allocating to Bitcoin venture, because, these aren't kids. At least most of them aren't. And these are serious pools of capital. And so there is a increasingly, I think, aware perception. And the way that I phrased it, I was doing a fireside with Preston Pish, and I pointed out that we've all seen like the logarithmic Bitcoin chart. I forget how many peaks and troughs it's had now, but we see all those peaks. You have to remember that the vast majority of people in the world have not seen that chart. In fact, I remember the first time I saw that chart, I never looked at Bitcoin's price in logarithmic form before. When you look at it in linear form, you see one of two things. It's either in what appears to be an insane bubble, or it appears to be a broken bubble, and it's dead. It rarely looks like anything other than those two. Whereas when you look at it in logarithmic form and you go back and study, okay, what was happening during these highs and lows each time, you see this recurring cycle. And it's done this like three times, three times it's had a higher high after a 75% drawdown or more, sometimes like over 90%. And there's a handful of stocks that have done that, but I haven't found any stocks that have done it more than three times. And so if Bitcoin has another higher high, it'll be like the fourth time it's done this. But what we have to keep in mind is that, again, most people have not seen that chart. And instead, what most people see is only the ones that happened while Bitcoin was big enough for them to be aware of it. So, for example, they saw the 2017 spike and then the crash, and then they saw the 2021 spike and crash, the higher high, higher low. So they've seen two, right? And so they think, okay, there was a bubble, and then there was a stimulus bubble, and then it's dead. That's how a lot of people saw it. Whereas if those of us more in the space are saying, no, this is still going strong under the surface, when they see like a third higher high, and maybe a third lower low, and that's where it becomes impossible to ignore, because it's not just how many times Bitcoin's done it, it's how many times they've experienced it happen, and therefore it's fully on their radar whether or not they've seen that logarithmic chart or not. And so I think that's where Bitcoin becomes more and more normalized among the institutions, and it becomes less crazy to talk about it, because it's this asset that is just, it's not displaying characteristics of a traditional bubble. People keep calling it tulips, but if you look at the tulip chart, it's like this 3-year chart of just this insane spike and a crash. It didn't come back higher and higher multiple times over 15 plus years. And so once people see that happen more and more, it becomes normalized. If you see how traditional pools of capital treat gold over decades, so multiple studies show that if you add a slice of gold to an otherwise stock bond portfolio, the risk-adjusted returns of that portfolio are better. And that's because gold tends to do well in decades where neither stocks nor bonds do particularly well. So the 1970s, the 2000s, for example, it's that non-correlated asset, or it's a differently correlated asset. And having that rebalancing slice in your portfolio was helpful, even though that was not very accepted in traditional pools of capital, even after decades, right? And so there are kind of these things that are on the periphery that they're the whole point is outside money, right? And so even if it's sometimes outside money that's encased in an inside wrapper, there's still kind of skepticism about it. So I think that somewhat tempers it, but I do think you're right that so this past cycle was about macro. I think the next cycle, there's kind of two things I'm kind of looking at. One is I would call it macro 2.0, which is basically kind of the meme last cycle was institutions are coming. And they never really came. I mean, around the margins they came. Hedge funds would trade Bitcoin. There's some entities that would do it. But for example, companies didn't really have the guts to follow Michael Saylor into, Bitcoin corporate treasury. We didn't see any Bitcoin ETFs. And so this cycle, assuming that some of these Bitcoin ETFs get approved, and, again, these institutions see another higher high that kind of shakes them out of what they thought Bitcoin was, I think you could have more normalization among institutions and actually have, not just narratives about it, but actually allocations. And so I think that's one. Number two is I think for me, the more optimistic one is the rise of these little Bitcoin hubs. And so, Bitcoin Beach is an obvious early example, but there's Bitcoin Jungle, there's Bitcoin Lake, there's Bitcoin Akasi. I'm probably pronouncing that wrong. I always keep written rather than, yeah. There's, I think 2 years running the Bitcoin Indonesia conference, run by a woman named Dia. There's 2 years running the Africa Bitcoin conference with Frida and others. And they're basically these little recurring hubs around the world and in some of the markets where it's most important. That I think is more powerful than even things like the Bitcoin Commons, Bitcoin Park, Real Bedford, PubKey, these pubs, these kind of locations within developed countries that are kind of these recurring, Bitcoin hubs. I expect over the next cycle, those to reach more critical mass. So this cycle was like the cycle of like those coming into existence, or at least, after the initial few, there's been a spread of those. I actually did a podcast with Kathy Wood the other day, and they like track this, and they kind of have like this number of how many of these little hubs that they're noticing, and it's like a crazy number per quarter. Most of them don't reach necessarily the awareness of the ones I mentioned, but there's a lot of these. If you fast forward 4 years, I expect these to be much bigger and more numerous, and that's in my view one of the healthiest things that occurs. That'd be one of the healthiest types of cycles. So that's I think the other half of the coin. It's institutional liquidity. Institutional capital is good because it can add liquidity to the Bitcoin network and take some of the edge off of volatility potentially, like that kind of rebalancing effect from portfolios and big pools of capital, and widen the ownership to varying degrees. That's healthy for liquidity and volatility. But I think a better thing is the actual self-custodial or community custodial hubs that are popping up. I think that's more important.
Lyn Alden provided a nuanced perspective on Bitcoin's evolving narrative, emphasizing the increasing institutional acknowledgement that goes beyond generational stereotypes. This heightened institutional interest isn't merely speculative. It's a recognition of Bitcoin as a legitimate asset class. Notably, the comparison to gold as an asset enhancing risk-adjusted returns in diversified portfolios carries substantial significance. The rise of Bitcoin hubs worldwide, such as Bitcoin Beach and Bitcoin Lake, reflects a grassroots movement supporting Bitcoin adoption, signaling a shift toward broader and normalized acceptance. Looking ahead, Bitcoin's journey appears far from its conclusion. Its resilience across market cycles, growing institutional attention, and global adoption collectively indicate a maturing asset with considerable potential. We trust this in-depth exploration has enriched your understanding of Bitcoin's current landscape and future possibilities. Thank you for tuning in. Be sure to subscribe and like this video for more enlightening content.